Annuities are terrible. You'll lose control of your money. You're locked in forever. If you've ever heard any of those before, you're not alone. Because here's the problem. Most people criticizing annuities either don't fully understand them or they're talking about the wrong type of annuity altogether. Because the truth is, some annuities are restricted, some are flexible. So today I want to pull back the curtain. I want to show you what being locked into an annuity really means, which annuities you should actually avoid, which ones are designed for flexibility, and why so many retirees are pleasantly surprised when they see how modern annuities actually work. But before any of that, I want to invite you to click the link below this video to schedule a free consultation with me. Because during our call, we'll discuss your retirement goals and concerns, review your current risk exposure, and then show you which annuity options are available right now to grow your money while staying protected. Okay, so let me tell you about a couple I sat down with recently. They're in their early 60s and they've done everything right, saved consistently, maxed out their retirement accounts, invested for the long term. But after the last few years of market volatility, they're scared. So they started looking into safer options. And almost immediately, someone told them, don't buy an annuity. You'll lose access to your money forever. That one sentence stopped them cold. But when we actually walk through how modern annuities work, the real numbers, the real terms, the real flexibility, their reaction was the same thing I hear over and over. Why did nobody explain it to me like this before? Because what they believed about annuities wasn't even close to reality. And if you're between 50 and 75, there's a good chance you may have heard the same misinformation. So let's start today by talking about the biggest misunderstanding about annuities. Here's the mistake almost everyone makes. They hear the word annuity and treat it like a single product. It's not. It's a category. And within that category, some products are good and some are bad. So being against all annuities is like hearing someone had a terrible experience at one restaurant and swearing off food entirely. The products are just too different from each other for one label to mean anything. Yes, there are some annuities that are genuinely terrible, with high fees or confusing terms or poor flexibility. Those criticisms are very valid. But there are also annuities with low or no fees, straightforward terms, and high flexibility. There's annuities that can protect your principal from market losses while still allowing you to participate when markets go up and create streams of income that you literally cannot outlive. And we even cover long-term care costs if something happens to you or your spouse. There's fixed annuities, there's indexed annuities, variable annuities, immediate annuities, income annuities. Some are built for growth, some are built for income. Some you should absolutely avoid. The only way to know which is to actually look under the hood. And this is something we do all the time for our clients at Coyote Financial Services. We're independent agents, so we're not tied to any single insurance company. We research the best programs in the marketplace and find solutions that suit your specific needs. Then we can show you all your options from all top-rated carriers side by side. So you clearly see which annuities offer the best growth potential, which provide the highest guaranteed income, and which options fit your retirement goals best. If that sounds interesting to you, click the link below this video to book your free consultation. Okay, let's address the biggest fear directly. Do annuities really lock up your money forever? Are annuities permanent? Are you handing your money over and never seeing it again? Short answer, no. You see, most modern annuities have what's called a surrender period. That simply means there's a window, typically somewhere between 5 and 10 years, during which withdrawing more than a certain amount may trigger a penalty. That's it. That's the whole locked in forever story. During that surrender period, most annuities still allow penalty-free withdrawals each year, often up to 10% of your account value. Many include provisions for medical emergencies, and once the surrender period ends, you often have full access again. But here's the more important point. Your money is already restricted in many places you don't even think twice about. 401ks have heavy age-based withdrawal penalties. CDs lock your money up for a certain term. Bonds can lose value whenever interest rates move. Real estate can take months to liquidate and turn into cash. So the truth is, every financial tool has constraints. What makes the difference is, what do you get in exchange for that restriction? And this is where annuities become genuinely interesting because what you're often trading a portion of liquidity for is principal protection, meaning a market crash doesn't touch your balance, and guaranteed lifetime income, reduced stress, tax advantages. And for many retirees, the thing they didn't expect to put a price on, peace of mind. Okay, moving on, let's discuss why smart retirees are rethinking risk. Because here's something I've noticed after years of working with retirees. You see, most people don't truly understand their own risk tolerance until the market actually drops 30%. When you're in your 30s or 40s, volatility feels temporary. When you're retired and taking withdrawals, volatility feels personal because it is personal. Every dollar you pull as income when the market's down is a dollar that you can't recover when the market bounces back. This is called sequence of returns risk, and it's one of the most important concepts in retirement planning that almost nobody explains clearly. Here's what it means. Two retirees with the exact same average investment return over 20 years can end up with completely different outcomes. One running out of money, one thriving purely based on when the bad years happen to them. If you hit a major downturn in the first few years of retirement while you're withdrawing income, the math starts working against you in a way that's very hard to reverse. This is exactly why many people are starting to rethink the old just leave everything in the market forever approach. Now, to be clear, I'm not saying put all your money into annuities, but protecting a portion of your retirement savings from market losses isn't just conservative thinking, it's smart thinking. Annuities can create stability inside a retirement plan, and stability matters more than most people realize, especially when headlines, inflation, taxes, and market uncertainty are constantly changing. Some people think that retirement planning is all or nothing, all market or all cash, all aggressive or all conservative, all annuities or no annuities. But smart retirement planning isn't about picking one lane. It's about building something that works together. Think of it like building a house. You need different materials for different jobs, right? Growth assets to build wealth over time, protected assets to create a financial floor, income assets to pay you for the rest of your life every single month, and liquid assets for emergencies and flexibility. Annuities, the right ones, mind you, are often the protected asset bucket, a portion of money designed to avoid market crashes, generate reliable income, protect a spouse, and create certainty in a plan that otherwise has a lot of moving parts. That doesn't mean abandoning growth. It means balancing growth with protection because retirement isn't just an accumulation game anymore. It's an income preservation game, and that requires a fundamentally different approach. So here's the real question you should be asking yourself. Instead of asking, are annuities bad? Or am I locked in forever? Ask yourself this, what problem would this annuity solve for me? Because if a product protects part of your retirement from market losses, creates income you can't outlive, reduces anxiety during volatile periods, and fits clearly into a broader strategy, it deserves serious consideration. But if it's complicated, expensive, poorly designed, or being reckoned without a clear rationale for your specific situation, just walk away. The real problem isn't annuities. It's finding the right one for you. So if you want help building a plan that protects a portion of your savings, creates reliable income for life, and addresses the risk most people don't see until it's too late, click the link in the description and schedule a call with our team here at Coyote Financial Services. On your call, we'll help you figure out if an annuity makes sense for you, how you can reduce unnecessary risk in your retirement plan, and how to start building a safer, more tax-efficient income. No pressure, no obligation to move forward, just a real conversation. Plus, we're independent advisors, which means we're not tied to any one company or product. We research options across the marketplace and help match you with what actually fits your goals. Thanks for watching today, and I'll see you in the next one. Take care.